Ooh, hello. Hello. It's 4:05 a.m. PST in California. I'm tired and I I had a moment earlier of reminiscing about Renaissance man, like the term and what I thought about it a long time ago, and I realized, sorry Stark, give me a second. I'm adding my computer to the screen right now. Ooh, aha. But anyways, as you can see, this is what I look. This is what I look at randomly. If you were to look at my feed, it's random. It's video games. It's MMA fights. I don't know. But I'm super hyperactive. Fuck. Hyperactive as in my intellectual curiosity. Think I sound crazy, but who knows? Who knows? Let me fix my mic. Ooh. Wait. I don't have any filters. Ooh. Let's do that. Oh yeah, I forgot you guys could see. Interesting. That didn't show up. Hmm. Microphone. Open. Ah, I forgot to do this. Hello. Or hello?
Hello?
Hello. Hello. I guess.
Um,
It's
it's
kind of
kind of here.
here. I mean, weird to hear
Myself.
myself. Hello,
Hello,
hello.
hello.
Oh,
Bang.
make
Make
my
my
voice
voice
deeper.
deeper.
Oh,
Oh,
do
do
I?
I?
Hey,
Hey,
welcome,
welcome,
Silent.
Silent.
Yeah,
Yeah,
I'm
I'm
fixing
fixing
my
my
mic.
mic.
I was fixing my mic earlier. And hey, what's up, Silent? Welcome to my first stream of a random ass series. How are you doing? How are you doing? What made you click on this? It's a bit dark. I don't have the lighting set up. You're meh? Oh, you're stream hopping. For me, I don't know. I've always had this idea where I wanted to learn new stuff, and I've always been lazy to document, like do YouTube videos when I could just stream it during the process. And I don't know, like the curiosity of how others learn, of how I learn, and just going a bit back in history, I guess. But I honestly watch random ass things, and probably I want to share with everyone else what I'm learning. Yeah, behind the scenes. Like, I've always been captivated by the idea of Renaissance man. What is Renaissance man? W- uh, Renaissance man.
Renaissance man.
Oh, what kind of voice is that? A person with many talents or areas of knowledge. I just think that we're not defined to just one thing, you know? We're able to do way, way, way much more. Yeah. But stuff that you like doing, you know, like how what am I interested in? Recently I've been studying finance, stocks. It's kind of interesting how the finance world works. Maybe I want to get into it. I came from a marketing background. Before that, stonks. Yeah, stocks, crypto, DeFi's. It's either that or maybe just learn random stuff like psychology. How do you apply that in I see. Or just like learning how to apply other areas of life into something that you want to do. Maybe you won't like doing that same thing in a year, maybe 3 years. And it's okay to let go of what you originally want to do because that's just you being curious. So, so watching this video.
Not every
My education? Nope. I dropped out of college to pursue a career in photography. I was a fashion editor, photographer, but more of editing during that time. No uni. It's it's too narrowed into just one thing. It doesn't fit my personality. And I feel like whatever I do, it has to fit with what's aligned, what I want to do later. Maybe I won't like I wanted to be a scientist before because I'm always researching,
everybody is equipped
but
to or interested in engaging in high-level discussion of abstract and creative ideas.
how long have
You
I
know, you
been
hear this idea
a
that everyone's
photographer,
creative.
editor?
That's a lie.
That was about
It's as straightforward as that. True
like 2
creativity is
years,
very, very
and
rare.
then
And so,
it got
and
boring.
if you happen to be a creative person, or if you happen to be someone who's profoundly interested in ideas, you are in a pronounced minority. Just as you are if you happen to be extremely extroverted, or extremely agreeable, or extremely conscientious. These are minority
Let me pull up the
initiatives.
chat on my
What you do
phone.
is you find like-minded people who are capable of engaging that. You know, heavyweight weightlifters compete with heavyweight weightlifters for a reason, and everyone thinks that's fine. And the same thing applies to intellectual and creative
Yeah, I
endeavors.
know.
So what you do
I
is
don't have double screens.
try to find a community.
I only have
where
one screen.
That's the nature of
So
the
I have to
community.
like, oh, okay, I'll do that to look at the chat,
So
or I'll just look at my phone.
I don't think so. I think what contributes to the siloing is the arrogance that goes along with it.
What do you
Because
mean by the
you
opposite?
can be interested in ideas and you
That'd be
can be
nice to know,
creative.
cause like
Well, that's the
Everyone's
arrogance of
different.
the intellect, right? That's the thing the Catholic
Everyone
Church
is
has warned
different.
about for centuries, is the arrogance of the intellect. So, because if you're wise as well as smart, and there is no relationship between being smart and being wise, they are not the same thing. There's no quick pathway from smart to wise.
Oh,
And many of the people who I've known who were very wise were, well, some of them were intellectually impaired and were still wise.
I do take
So
what I have now also.
that brings up the block. And I see this, for example, happening in the United States, particularly because the last time
My
I was
English
for example, I had friends down
is
there.
not amazing, and then
Friends
and
are
I'm a
Republicans.
native English speaker.
Some of them were talking about the Trump voters,
But
and they
I
were
do
saying,
take what is now and adapt to it, but
and
I
I
also
thought,
think about like what's more to it.
because that's 50% of the damn population.
Well, what's more to it?
You
I
think that they're stupid
like
and beneath you, but it's not
it
conducive
has to have some meaning to it
and there's no
than just a
relationship
surface
between
level.
them
Like
because
usually it's just like,
a straight
all
line.
right, I want to do this just for money, but
And so I think that if your
when you have money,
character is developed and you
what's more to it?
can have your siloed creative community, but you develop enough wisdom so that you can see all the things that people can do that are of high ethical utility that are outside the
And
intellectual
that's the
domain.
thing. I just want to
I think that's why in the New Testament, I think that's why Paul
kind of
says,
want to just explore that and just
well,
to show
first of all,
people like maybe
it was one of those
uh, well other people who think alike,
dishonest, it manifested
they probably
itself
think they're crazy or
of
they don't know what to do with it, and maybe I could
world good.
light that
That's
fire in them.
nice metaphor there, but it's also a warning
People who
against
don't like to stick to one thing
the
just because they're
equation
just so
of
curious about life.
brilliance with moral superiority. And so if the intellects would drop their moral superiority, and fat chance there is of that, then that
Whenever I'm looking down, I'm
dividing
just
the working
looking at the
class,
chat.
say, and the elite would resolve. And there's every reason to have.
What do I do on my free time? All right, I'll show you what I do on my free time right now. So, free time, I mine, mine crypto. Uh, Free time, I look at stocks, mainly cryptocurrency. Whenever there's a pause when I'm speaking, I'm just like thinking, I want to say this, I want to say that. Yeah, just like kind of studying how this whole shit works. And even then, looking at this is just surface level. And what's more to it is just probably the psychology of it, because there is a psychology in markets, and I never understood it until a week ago. What do you mean, watch Jordan? Yeah, I never understood this, and it was Jordan Peterson. I never understood it, but I think everyone should learn it. Learn how your money moves, because you don't necessarily own it. All right. All right, let's look at this. This is gonna be. It's laggy. You know what? Let me pause this. It's probably that. Oh, it's much better. All right. Let's change this. This looks weird because. Oh. All right. So, we all know when we're looking at a graph of like, let's not do Ethereum. Let's do Apple. People always do like different stuff, but everyone knows what Apple is and everyone knows what a stock is. So when you're looking at these lines, you know what? Let me take this off. When you're looking at these lines, you know that all the price is moving, or maybe some of you don't. So right here, it's an XY chart. On the Y side, you have the prices. On the X side, you have the dates. So when it increases, decreases, those are your price, and then sideways your dates. And when you're looking at these charts, they're not in a linear fashion. They they go in oscillations. Well, not oscillations, but I guess you could say that. Um, so they go like that. Prices. Why do they do that? That's like if your company is making more money, or you have good news, and then the value of your company goes up. The more you own, the more assets you have. Here, let me check. So buying stocks as a new booty, as a beginner, you you want to here, actually, super simple, all right? Make this longer. These, the green and the red, each each one of these that are formed, they're called here, they're called candles. I have no idea why they call them candles, but they're called candles. And then this this line up here, just a thin line. What the? It's just a line that connects like that, right? Those are called wicks. And these are just stuff that you have to remember. So a wick up here and a wick down here. The only reason why you would want to learn these terms are because they do represent how it moves. All right. Oh, hold on, hold on. You still here? My bag. Oh, here. Let me put on some music. Mm. Oh my god. Trying to look for the stream beats. Do I get a notification? I think I do. Yeah, I do. All right, but let's continue this. So these are called candles, and we know green means a positive, red means down. So more money, less money, right? So each one represents your price right here on the right side. So when each one is formed, right? Those are a different time period. So it's at the bottom right here, down here. See how it says 12 October 20? And this candle happened at 1, and this candle happened at 5. That's the real basic of how to read just the candles, right? And then up here, it's kind of skipping a bit ahead, but it helped me understand, like, oh, okay, you could change how these look. So there's 4 hours, 1 hour. So this one candle represents what? 4 hours. So, but you'll see. Wait, wait, wait. Oh, I lost it. Let's do a new one. I'm gonna circle this one. Where's my drawing? But anyways, 4 of these candles represent 4 hours. When you change the time frame, but you just see 1 instead of 4. So as you break this down, you see more candles, and they represent each time that passes by. Each candle is 15 minutes, and then you could go 1 minute, right? 1 minute, 1 minute, 1 minute. So in in basic terms of trading stocks, you want to buy here, sell up here, and that's how you make money, right? But what are these charts for, and how could we use them? Use them by wait. Yeah, for sure. Meanwhile, no. I'll keep on going. No, actually, I'll wait. Meanwhile, we'll do this. Ooh. I haven't slept. It's 4:27 a.m. We'll do something quick. Hmm. Like, see, my brain can't stay still. I have to do what's next. I can't stop. I gotta keep myself occupied. I'm thirsty. If I had my own place, I'd be yelling because I'm that passionate. Why is this taking forever? Oh, there you go. I'll do one match. Go back to trading, not trading, but explaining how you could interpret that. Nope, you're not touching it. Ooh. Oh, nice shot. Nice pass. Oh, my legs feel weak. Oh, I messed up. What the? Oh, I suck. Oh, I suck. Oh. Wow. Just like that. Tap that. You got that? Oh no, I didn't touch it. Oops. Get that? Oh no, I can't get that. All right. Let, let's talk about what I'm doing. All right, so I'm not going for the ball because I knew that there's no teammates behind me. So they would have maybe scored. I suck. I suck. Yo. Okay, okay. Wait. L- let's score one more. Let's score one more, then we'll get back to it. All right. No, I'm taking that boost. Oh, oh my god, bro. I was ready for that. I'm getting bumped. Just gonna hit that. I lied. Off the wall. Team. Nice shot. All right. Let's get back to this training. All right, so each candle represents a different time based on what you've clicked up here. So each candle, all right, you know what? Let's look at the whole chart, right? If you were to click different time frames, they get smaller or bigger. So I clicked on D, that means a day. Each candle represents a day, and you could see the price, right? So how do you look at the price? And we'll get to that right now. It's better to show it on this. So 1 minute, 1 minute you see this candle and it covers a range right here on the right side. It covers the range. So the wicks, ooh, it's going up. When it's showing green, that means that it started from the bottom. So then it started rising, and then at the end of this candle, it represents a close. So you see how the next candle over, it starts off where it ends, right? On that minute. So 4:30 and 4:31, it started down here. But then these wicks, you see, they're all different lengths. So the wicks shows how far up it has moved. So with this candle, 1 minute candle, it reached to 32,126, and then it also dropped all the way down here to 31,702, right? So this whole thing represents how it has moved, the bottom how it has started, and the top of the candle how it has closed for that minute or whatever time frame you've selected. So 1 hour, they could be a lot longer in different prices. So 33,273 down to 32,240, right? And so let's go back to the minute. I'm just really stretching them out. So, and then vice versa for the red candle, it started up here. You see how the green ends right here, and it started right here. If it was green, you would have seen this candle go up and close at the top, but instead with the red, it closed at the bottom because it's just going down negative, and at the end of that minute, it's negative. So that's why it appears red and green. And you see how even though it dropped down here in this green candle, it's still green because it closed above this green candle. Hopefully that kind of makes sense. So where does the buying and the selling come in play? So when that happens, how do you know like when to buy, when to sell, right? Just by the visuals, we already know, okay, it went down, right? And you know when you buy it when it's cheap and you sell it for more, you make profit, right? So in simple terms, like you always want to buy when it's low, right? But the problem is, how do you know when it goes back up? How do you know like if I bought it here, right? In this section, that's low, right? In terms of that section, how would I know if it's gonna go up or is it gonna completely go down? So this is where you identify yourself as what type of trader you are. What type of trader you are. So there's swing trade, position trade, scalp trade. So you know what? I'll just do the two simple ones that everyone talks about: a swing trade and a scalp trader. A swing trader is for people who don't want to spend a lot of time, or they don't have a lot of time. Oh wait, and then there's just investors, right? All right, so these are the people who don't want to spend a lot of time, or they don't have a lot of time, but they still want to trade. Swing traders. And then scalp traders are who what people who have a lot of time. So if you want to spend 8 hours a day compared to a swing trader that trades for what? Oh, my keys don't work, but a swing trader who wants to buy and sell stocks within a time frame of, let's say, like 1 week. So 1 week from now, I want to sell my stock, or 3 days, or 1 month. So that's what you have to decide. Um, and then scalp traders are people who are on the computer consistently, way more than swing traders. They look at they look to trade within time frames of 1 minute, 5 minutes, 15, 30 minutes, 1 hour. So these are the people who wait, let me do 1 minute to 1 hour. These are the people who want to make money within 10 minutes, maybe 1 hour, you know. And you know those like YouTube videos where they're saying, "Oh, I can make 1K a day," stuff like that. And then there are people who could say, "Oh, you can make 5K a month. It takes longer." So that's the difference between those two types of traders. Whether you have a lot of time on your hands or you just want to stare at a stock, not have too many, and sell it when you have time, or when it's like at a longer trend. But I would say swing traders, you'll still stare at the screen a lot, just because so you could analyze, look at these candles and how they form, right? Um, hopefully I have the definition correct. So you kind of have to identify which one you are before you start looking at the chart, right? Because you have so many options up here. If if you want to do both, you can. Um, a lot of people suggest doing swing trading at first because you still have no idea what you're doing, or just play with fake money, which is called paper trading. And you're like, what the hell is paper trading? Paper trading is another word for um fake money. So you said, how do you get profits? So if you want to buy or sell stocks, you have to go to a brokerage, right? Nowadays, you could get that on your phone. Hold on. Oh, oh, look, my money went down. Um, let me show the screen actually. So you see how just money goes down. I'm using Robinhood. Very simple, user friendly for people who don't understand stocks. I would say just a line like that, right? Which basically represents the same thing, but you get more of an accurate representation in each candle. So the thing is, why do you want to know these candles and not just like this, how you see it, right? Robinhood, you just see it like this. It's because each candle tells a story. That kind of sounds lame, but each candle tells a story. Um, oh, that's probably like too much, actually. That's not basic. Probably intermediate. I'm getting ahead of myself. So you use this app to buy, sell stocks, a simple with the press of a button. You buy low, you sell high, but you look at these charts to identify, okay, if you're doing your analysis up here, you know that it was going to go down and then go back up. If you had that, if you're speculating it correctly, then you would have made money. That hmm. What else? What are you thinking of? what do you want to know about these charts? But to me, it's like my mind's like all over the place. I'm just like, I want to say this, I want to say that. There's no structure to this teaching, but it's probably the easiest way to teach someone or for someone to understand. Are you just wondering how you get profit? Well, you just buy low, sell high. And that's just with the click of a button if you're using an app. So, oh, I would have to show you here. All right, all right. You know what? How often can you buy? Um, on this app, yes, there's a cooldown. I don't I don't think they allow you to day trade. That's what it's called, day trade. When you're a scalp trader, they kind of limit you because it's more for investing, I guess, unless you have the premium version of this app, like a subscription, but I don't want to pay for it because I mainly trade crypto and I use a different platform. But all right, let's pull up. Let's pull this up. Ooh. All right. So when we're on this app, I keep on put my face. So let's say I want to buy Apple, right? So I'm gonna come to this app, type in Apple. A list will appear of different companies, but the top is Apple, and that's what we want to select, right? Apple right here. Is it backwards? I think it's backwards. Yeah, right? That's backwards. How? Let's transform. Oh no. Transform. Oh, what the hell? Or you know what? But so you see this, right? All you have to do is go to the app, press trade, and then you click buy. And then you enter the amount that you want to purchase. I only have 8 cents on here. You buy the stock and then you own it. You own it, and then when you see it increase, you sell it. So that's just the basic idea of just trading and how people make money. And then it kind of goes more in depth when you kind of get into it because there's different types of trading, like futures, like contracts. They and that's how people make more money by doing that. But you could also make money doing what I just showed you. Simple. Buying and selling, but it's not easy. It's not. A lot of these people will say it's easy, but it's not. Pull up the chat again. Whoever's telling you that it will be easy, but you'll lose money, don't believe the easy part. And do believe that you will lose money during the process of trying to trade because we're impatient to wait when we just want to trade with real money, right? We just want to make that money. All right, all right. Um. Okay, how do I use the money you bought to buy? Are you talking about for crypto or what? I wonder if I could pop this out. Mm. Oh, I can. Just like that. So from buying stocks, after you sell it, you could just transfer it to your bank account. It'll take a few days with Robinhood, but there are a lot more other apps. But if you're just getting into it, Robinhood may be the best like starting point. And then once you kind of like figure it out little by little, you'll move on to different different platforms. And you'll understand why. Like what what are the benefits from me switching from Robinhood to like another platform, right? Like slowly, a- as you're more curious about learning stocks, you'll figure it out. You'll start to Google search, okay, how do I make more money, right? And then you watch videos and you're like, oh, okay, wh- what are they using? I kind of want to use what they're using. Oh, I'm a hood on because my hair. Oh my god. I kind of want coffee before I sleep. You know what? I should do a crash course on mining because on crypto mining because you could do it on your cell phone only with Androids or you could do it on your laptop. So the only way when you get revenue is by two things. Either you sell it or the company pays dividends. But if you're trading, you don't really care about dividends. Dividends are given out. Just I don't know how frequent. Just depends on the company. Sometimes they do dividends, once a year, maybe 4 years, or every 6 months. It just depends. But just trading, you want to buy when it's low and sell high. So if I bought an Apple stock for $25 and in a week it increased from 25 to 50, I sell it at 50. So I made 25, right? And that's not including the fees of the application that you're using. So maybe you get $24. And that's just the basic idea of making money from stocks. So what happens if you don't buy or sell? They I mean eventually they increase. Eventually sometimes they do pay you out or you just keep them. You just keep them as the assets and then your what do you call your net worth just increases over time. And instead of just putting that money into a savings account, maybe you've made more money just by investing it into stocks and just not looking at it for 5 years. It makes you more of a valuable person in money. in net worth. So those are what you called assets that appreciates. They increase value over time. It's low key kind of fun trying to like explain this. But then my mouth gets so dry. All right, I'm gonna get some water. It's just right here. All right. Let's say stocks went down. All right. Stocks went down from 10 to 5, and I have 5 at the moment. Sounds like a mathematical problem. Do I sell or buy? How much should I sell or buy? That's honestly a really good question. Like, it's a good question to ask, and I won't explain it black and white. I'll kind of expand on it. So let's draw this. So this is 10, right? And this is 5. Wait, no, that's ugly. I'm better than that. So each line represents a different price. So this one represents 10, 7, 5, then 4. Weird ass numbers. I'm not gonna go 10 all the way down to 5, and even though I did 4 digits. So you're saying if this goes down to 5, right? Right here, started from up here. Do you sell or do you buy? But what if it goes like this? You know? How do you know if it's not going to just go down straight and never go back up, right? How do you know this? I won't say sell. I won't say buy, because you have to look at the chart and its history. Each candle's history and new candles that form are just present time, right? And you see over time how it moves. So if you're saying if it was here $10 and it went down to 5, right? Would you sell? If you're looking at past history numbers, you know that eventually it could potentially go back up to 50, right? Because now you're not looking at just this time frame to this. You're looking at it with the historical data, and you kind of use these past information, this whole range and beyond, to know that okay, eventually it could go back up, because that's just history, right? Or it could form new heights. It could go all the way up here, or it could just go way down. But then you also know that, wow, It could also go way below $10. It could go $1, you know. So that's why people look at these charts. Each formation in sections represent a formation that will give you an indication or tell you that okay, there's a chance it might go back up. So that's why it's not simple. Like you could buy and you could sell, but if you buy at, let's say you bought at the wrong time when it's 10 and it goes down, but you have no idea like what the hell you're doing because I never knew. Um, that's why people learn this so that they know that price will eventually go up or it will go down. Yeah, so that's why people sit at the computer all freaking day. Okay, like right here. Uh, it's going up. Ooh, I see it's going up. I don't think it's gonna go down, but potentially it might go down from here to here, you know. And when you dive further into it, these candles represent people. I I say people because there's two side. You know how there's a good side and the bad side, right? So there's the good side, and it's an opinion. You define what's good and what's bad. But just in general, this represents two people, right? Oh, let me do some art. Boom. All right. Then you have people who are bandits. Oh shit. I couldn't draw a mask. I didn't want to draw something else. But you have people who are bandits who are bad, and people who are police officers. They're supposedly good, right? When oh, that's another good thing. Supposedly good, right? It's just all a matter of opinion. So the good people are the green candles, and the bad people are the reds. So these people are called in the marketing world the bears and the bulls. The bears and the bulls. You know, the horns. So bulls, I that's what these people are called. So the bulls are people who wants wants the price to go up. And then the bears are people who wants to go down. So when you're just learning how to trade stocks, buy low, sell high, it kind of gets confusing. Why would people want the price to go down? There are two types of people in this world. They want the good. Oh, no fucking way. All right. Fucking fell. That's a fail. That's a fail. I'm mad at myself. I drew all of this. I drew this. All right, so two two types of people. The good people are the bulls, and the bears are the bad. Bulls are the group of people that wants the price to go up, and the bears are the people who wants the price to go down. So why would you want to do that? Oh, yeah. If you want the price to keep on going up, you will keep on buying and selling in a linear fashion. But then there are people who wants the price to go down because they want it cheaper. For example, it goes up because the bulls want the price to go up to $10, but then it goes to 5. Why the hell do people want it to go 5? So I could buy 2 stocks for $10, cutting it in half so that I eventually have more stocks, right? And then if it does go back up, I now have 2 stocks and it goes back to 10. I make another $10. No, not another 10, another 5. What the fuck? This at 10 I would have had 1 stock, but at 5 I would have had 2. I can't even do basic. Yep. You're right. You're right on point. Green candle means that more people are buying. More supply, more people buying, more people owning. When you're selling, you have less supply. Basic concept in economics, supply and demand, which represents this. There's a lot of supply, so people are buying. People are selling their supplies, so the prices go down. The more people that sell, the less people that own it. They're like, it's like saying the price is going down because I don't want it anymore. That's why it's going down. The bulls are going up and the bears are bringing it down. Um, so that kind of explains it a bit more why the prices move, because there are 2 types of people that want the prices to go up and wants to go down. Move it over here. Let me fix this. Boom. Okay, so let's say from January to December, stocks went up from 10 to 100. I buy in March and June. What would that look like? All right. So let's go to day. So let's just do Bitcoin, right? Everyone knows Bitcoin. Everyone knows Bitcoin. So the start of 2021, if 2021, okay. If you're to buy stocks on March, right here, perfect. In March. Let's say you bought it at when the candle closes, right? At the top of that day in March, March 1st. Let's say 50K. You bought it at 50K. You bought 1 coin at 50K. So you have $50,000 worth. And then you bought one in June, right? You bought one in June. You're not gonna like it, right? Let's say 37K. $37K. But now you can see it. So then let's say you've invested your money a total of 87,000. But of course, you've seen it dropped down from 50K all the way to 32K, right? So when if you're investing it like that, that's not like you're a trader. You're investing it long term. obviously you would see your whole asset portfolio to be decreased, right? So now you're kind of stuck. It's either do you want to sell your crypto now because potentially it could go all the way down here. Who knows? But that's why you kind of have to understand the charts. Oh, one quick thing. So you see how these candles represent days, right? It went up to its all-time high, 65K, and then it drops down. You see how it drops down right here, this candle? And then you also have a section where it kind of drops down too. It didn't just go up like that. These prices, um, they go to this level, the same prices range, because they're already familiar with it. If they didn't have this, then it wouldn't have dropped to this. Maybe it would have went down more. So these are called levels. Levels as in if you have a bookshelf, that's a shelf. It has support to hold your books on top. So that's called a support. And then if you're to draw a line, like let's say I don't know anything, I drew a line from that candle. You see how it just touches other candles too? It touched, more than 3 times. That means that you found a support level and you use that support level to identify how the money moves. So each candle, how far they could go down and how far they could go up. So previously, well, you could see it dropped right here. We could say that this red candle could potentially hit this because this is what you call support, but it's not really support. But just like speaking on a basic level, each candle that ends kind of show like side by side, like, oh, other candles have been there. So I could rely on this level that potentially I could buy it down here, right? So if you bought it somewhere here, you sold up here, and you're waiting for another opportunity, you could use these previous candles to identify potentially, okay, this day probably it could hit down here. And then each candle that adds up, it starts to build a new layer. You see how this candle doesn't reach the bottom. It has reached this area, so you could extend that. So I could say that this candle could potentially reach down here now. So then I wait. You see how it goes down? And then I could buy another opportunity here. And then you know how there's a support? And then now there's something on top of it. Let's say another bookshelf. All right, you're like, all right, I have another bookshelf up here. I want to stack more books. But these are different sections. I'm like over here trying to point, but you see how like they surpass that bookshelf. So these are called resistance levels, or I'm just say shelf. And then the bottom one is ooh, messing up. Support level, right? So how do these prices break through? It's just like you got to break the support level, you got to break the shelf, right? And how do people do that? By having either too much supply or too much demand. So prices rise up, people are buying. How often do I buy and sell? every day. I I day trade. I look at it often. I've made money. I've lost money. It's a learning experience that I'm going through. And what made me want to learn how to trade? Um, what made me want to learn how to trade is to be able to do my own shit. To not my profit. Let me think. Trying to add it. Not a lot. I started like 2 months ago, I think. 2 months ago. Like 3K. Not a lot, but um learning. I've helped my friends make money. How much did I start with? I started with 500. Honestly, you could start off with however much. I'm gonna tell you a secret. I'm gonna tell you a secret, or just like a change of perspective. Yo, what's up? Oh, yep. All right, so here's a secret. Here's a secret that not many people will teach about finance if you don't know anything about it. All right, let's say in terms of money, you kind of want to look at it differently now. And I hope this helps you in the future and makes you look at your money differently. So I have $10. And then let's say you have $100. Obviously, you have more different life circumstances. Sometimes people could have more, some people could have less. Um in in normal life, we would look at it like, wow, they have more. I mean, obviously they do. Can't deny that. But you have to look at it as in, so you have $100 and you made $10, right? You made $10 from your investment. That's a good amount. And then with $10 you made $1. Sounds about right. Obviously the $10 is better, but I have $1. You have more than me. But in terms of finance, these two are equal. Not in like the amount you own. Not in the amount you own, but in the amount of percentages. You and we both have equal opportunities to gain in the same percentages. So with me, although I gained $1, I gained 10%. Although you gained $10, which is more, you gained 10%. So when you're in finance, people always talk about percentages. Oh, how much did your revenue increase? How much did your assets increase? In percentages, not in capital. So we all have equal opportunities to accumulate the same as the rich does. You want to think of earning money in percentages, not in capital. The reason why you do that is because it's kind of unmotivating. It's kind of unmotivating, to be honest. You're dead broke, but hey, I gained 10 percentage, or I turned $10 into $20, 100%. You're doubling your money. And each time you do that shit correctly, each time you do that shit correctly, each time you're successful and you fucking keep at it, this whole thing turns into something bigger. So if you have not financial advice, just being able to take care of yourself and your future is probably the most blissful things that you could ever do for yourself. Because what if the economy collapse? What if we don't use shit. What if we don't use dollar bills anymore? And what if we just use fucking Bitcoin? I don't even know if that's a symbol, but what if we use Bitcoin and the dollar becomes 50 cents? A dollar. $50. Your dollar is shit now. It's not the same. So, okay. Good question. Is there a limit to how much you can sell or buy? Can you go all in? You could go all in, but from my research, if you're trading, you don't want to go all in. So let's say I have 100, and this is what you call dollar cost averaging. Yeah, DCA. I have $10, but let me split that up. Let me split that up 10 times, $10 each, right? So you don't want to go all in, because if you go all in, you'll lose this whole thing. You'll lose all your $100. Just say that. But if you do it in percentages of portions of your investment, you could have $10 here. You could have $10 in this stock, $10 in this stock. And why do you do that? Because what if you get what if you get 2% on this, right? What if you get 10% on this? And what if you get 7% instead of $100 into like 4%? And then that whole thing, you only get 4%. While if you're to split your money in different areas, maybe, in that, you're making way more than 4%. The reason why the poor don't get rich is because we don't appreciate percentages. I'm broke. We don't appreciate percentages at all. Math is just a bunch of value. So this is called, it's not even called dollar cost averaging investing, but this is just to be smart. Or maybe look, check this out. Maybe you could have a negative 2%. You lost 2%. Yeah, I'm glad, bro. I'm glad like this could help you in its most simplest form, you know. And when you first start, of course, you're not gonna know like what do these mean. What you could do is do your research and go on YouTube. Oh, look, you can see me. Like, you could go on YouTube and you have people showing their freaking charts. Oh my God. You have people showing their charts. You might not understand what the hell they're saying, but you get to see how others do it, you know? They might give you some advice. Okay, they might see this going up in a few days, and then you're like, okay, you might buy into it because you're just listening to rumors. And just to start off, which is like the worst advice, and you don't want to do that. You kind of want to do your own analysis to understand, okay, for sure, myself, and I know why and how it's going to go up and down. But when you start off, we tend to get lazy and we're just like, oh, it's too much. It's just too hard to understand. So you just watch other people, how they do it. You kind of go by with what they're saying until you understand it. You're like, oh, that's how you do it. You get immediate results. Just like that. But you can see it go up $1 and then you're just waiting for it to go up to 100. So it depends how the market moves. Okay. People, there's jobs that, how there are marketers, right? They advertise products, services. They do anything good or market something great. The value of the company goes up in terms of you could do like I just if you're doing Robinhood, I think they limit you to 3 trades. But if you keep on doing it on Robinhood, you'll get your account restricted. But you should look into other platforms, but just for basic buying and selling, Robinhood, not financial advice. But that's where I started. It's fun. If you like to lose, then trading is for you. You have to be the type of person that could be like, I lost $100. Um, well, right now, I'm just waiting for it to go back up because I bought it. When did I buy it? I bought it up here uh, because I was listening to someone and I was too lazy to do my charting when I could have done that myself and knew that it was going to go down. Because look, it goes up and down, up and down, up and down. I already knew it was going to go back down, but at least to right here. So I have some up here and I'm just waiting for it to go back up. Not all trades are perfect. Oh, let's clear this. Okay, so how do you lose money? In my hips. In basic terms, it was to buy low and sell high. But you also have to think of the human mind, the psychology of seeing red, seeing negative percentage, right? I bought it up here thinking that it was going to go up here, but it didn't go up there. Instead, it went straight down, right? So, in psychology, you think in one direction. Either it's going to go up or either it's going to go down. People sell because they don't want to, they fear psychologically that maybe the price will keep on going down like this forever. Well, not forever, but for a long time. Or it could go like this or like that, you know? So people, when they buy up here thinking that it's going to go up, they sell up here, they make money. But if it goes down, people are like, oh shit, I don't want to lose any more money. I think it's not going to go back up anytime soon. So I'm going to just sell right here, take my loss at what, 10%, and then just wait till it goes lower. Some people will sell it down here because they've lost faith in crypto. You know, like, I'm losing money. Like, you tell your grandma, like, oh, invest into this. And she's complaining, have I made money? Oh no, you're not. You're actually losing $10 right now. What? Why am I losing $10? Like, you know what? I don't want to lose any more money. Take it out. I did that with my dad. The same situation. I told him just wait. Just wait. Eventually it'll go up because I know the market. If not now, later it will. So people lose money because psychology mainly. Yup. I could be like, oh, it's going down. I'm gonna just sell here. I think it's gonna go down lower, or I'm just not gonna mess with it anymore because I've lost this much money, you know. Or they could say like, oh, okay, let me sell up here, and then I'll buy down here, and then I'll make more money because they rise to a longer length, you know. It it depends where you buy and sell, and obviously we're not gonna know when it stops like that, you know. We could say that, oh, it might go lower. So that's why people lose money on like the simple basics of trading. Mm, yep. In basic terms of trading, buy low, sell high. You always remember that. Buy low, sell high. More money. But then you have to do your research to know, like, okay, I think it'll go back down. Or if you're unsure, okay, what are other people saying? You know, um, and then when you're getting into this, yeah, it's not gonna tell you when to buy because these prices are controlled by the bears and the bulls, right? People are buying and selling at different times. That's why people aren't always selling it at the top. Some people might sell it right here. And then the price will go down, you know? Some people are like, okay, we don't want the price to go up anymore. Let's just sell right here and just bring it down lower. So these numbers don't just happen by itself. It's happening because a whole group of people are buying and selling at different times. And if it was like in unison, then that'd be bad. Because we all know that it's the market is manipulated. There are people, if you have more money, let's say I have 1 billion compared to 100,000, obviously I have more power and money. So I could buy more stocks than you can. I have that power. And the more I buy, the more supply that's in there. Oh no. The less supply is in there, so it's gonna be increasing. If you have too much of something available, it goes down because it's not that popular. Like Supreme. It gets sold out every time. And then you only have a limited supply of it. Like shirts, that could be referred to as stocks. And then it becomes more valuable if there aren't that many that's created. So Silent, what do you like watching on Twitch? Before you go. And then good night. And then it gives me an idea like, okay, other people might like this too. Hey, just hop around. Alright, man, Silent. Thanks for tuning in. Appreciate it a lot. Crash course to stocks. Oh, I play a lot of COD. So I'll probably be playing COD some other time. Alright, peace.